Revolut Bitcoin price briefly crashes to 2 cents on feed disruption. Revolut users opening the app on May 8th saw Bitcoin priced at about 2 cents, far below the roughly 79,903 the asset was trading at across the rest of the market at the time of writing. The fintech told Decrypt that a third-party service disruption was the cause, and that customer trades were not executed at the displayed figure. The glitch lasted long enough for screenshots to spread across X, but short enough that no large-scale fills are documented. Revolut said its order routing rejected the affected quote, so balances and trade history were not impacted. A display problem, not a market problem. Bitcoin was changing hands at 79,903s across major exchanges during the same window, with a 24-hour move of 0.45% per CoinMarketCap data as of May 8, 2026. Other Revolut crypto pairs did not show the same anomaly in the screenshots that surfaced. That points to a fault in the specific BTC/USD price stream Revolut consumes from its market data vendor rather than a wider exchange or wallet failure. Revolut runs its crypto trading desk through a mix of third-party liquidity providers and price feeds. When one of those feeds returns a malformed quote, the user-facing app can briefly show a number that bears no relation to the live market. The safeguard is on the execution side. An order matched against a stale or broken quote is supposed to fail price band checks before it reaches a counterparty. In this case, those checks appear to have held. No user has yet posted evidence of a sell order filled at the 2-cent print, and Revolut's statement explicitly attributes the issue to a service disruption affecting the displayed price. Feed reliability is the weak link for app-based crypto. Most retail crypto users now interact with Bitcoin through wrappers, brokerages, neobanks, and payment apps that surface a price they did not generate themselves. Revolut, with more than 50 million users globally, sits squarely in that category. The company has rolled out crypto trading across the UK and the European Economic Area and offers staking and a crypto-linked card in select markets. When the visible price decouples from reality, two things go wrong at once. Users panic sell or panic buy based on a number that does not exist. Automations and price alerts trigger on noise. Even with execution layer protection, the trust cost is real. The next time a price looks wrong, users will not assume it is a glitch. Self-custody advocates seized on the incident to argue that feed dependency is a structural weakness of custodial crypto interfaces. The counterpoint is that any wallet, custodial or not, has to source a USD price from somewhere, and that a display error is recoverable in a way that an actual missiled trade is not. The execution question. The piece of this story still being verified is whether any orders did clear at the bad price, even briefly. Revolut's public position is that none did. If a fill at 0.02 had occurred and gone unwound, that would convert a display incident into a counterparty event with potentially refundable trades on both sides. For now, the working assumption from Revolut, and from the absence of user complaints about specific bad fills, is that the price band guardrails worked. The company has not detailed which third-party vendor caused the disruption, how long the fault lasted, or whether the feed has been switched out. European users on Revolut Crypto can pull statements covering the affected window to check for any trade printed outside expected market range. Anyone who placed a market sell during the disruption window has the strongest case to ask Revolut for a manual trade review.